a session on internal audit from the lens of stakeholders. The speakers for the day are Krishna Chaitanya and C.A. Shivarama Subramaniam. My request our chairman to escort both the speakers to the dais. I also request our chairman to greet them at the podium. Welcome to both of you, sir. Please take a seat.
Camera
I'll request our chairman to do the welcome address now.
Good evening, my dear esteemed members. As the chairman of Bangalore branch of Institute of Chartered Accountants of India, it's my profound privilege and a great pleasure to welcome you all to this distinguished seminar on internal audit from the lens of the stakeholders. The role of internal audit is ever evolving, becoming an increasing integral to the strategic objectives of the organizations worldwide. This seminar aims us to understand this evolution through the lens of our stakeholders, providing us the insights that are both diverse and deep, reflective of the complexities and challenges we face in our profession. We are honored to have among us two eminent speakers, C.A. Shivarama Subramaniam and C.A. Krishna Chaitanya, whose reputation precedes them. Both of them have a vast experience and acute insights into the auditing and consultancy, has been a forefront of advocating for innovative practices that align with the stakeholders' expectation. We have both industry leader and from our profession to throw us light and intricacies and the expectation from various stakeholders. As we embark on our discussions today, let's remain open-minded and eager to learn from our esteemed speakers. The seminar is a testament to our commitment as a branch for individuals to excel in their ethics, continuous professional development, and it's a platform to share our experiences, challenges, and also seek solutions. I extend my heartfelt gratitude to both C.A. Shivarama Subramaniam and C.A. Krishna Chaitanya for sharing their valuable time and wisdom with us, and to all our attendees. Your presence underscores the vibrancy of and dedication of a community to uphold the highest standards of a noble profession. Thank you for being here today. Let's make the most of this opportunity. Over to you.
Thank you, Chairman. Now it's time to introduce our speakers for the day. The first speaker whom I am going to introduce is Krishna Chaitanya. He is a partner in EY's risk consulting practice. He works with several leading organizations, enabling them to develop and sustain robust governance mechanisms, operating processes and internal control systems. His qualifications, educational qualifications include, he's an FCA from the Institute of Chartered Accountants, Diploma in Information Systems Auditing from the ICI, Certified Internal Auditor from the Institute of Internal Auditors US, the Certified Fraud Examiner from the Association of Certified Fraud Examiners US. He has more than 20 years experience, professional experience, and his international experience includes countries like many countries in Europe, Middle East and USA. He is a past president of the Madras chapter of the Institute of Internal Auditors, and he continues to serve on the board of the chapter as a governor, and he is been promoting the profession and is sharing knowledge on internal audit. He is a tech enthusiast and actively tracks latest developments in enterprise and consumer technology. So welcome to you. Thank you for accepting our invite. The next speaker is Shivarama Subramaniam. He is known for his audit style in everything what he does. We had an opportunity where we met him And every time when we discuss any topic, he had a different way to answer that showed that typical internal audit mindset of his through his answers. So he is an internal auditor in Titan Industries. Titan Company Limited, and he has more than 20 years experience at leadership levels. His industry agnostic experience it ranges from infrastructure, manufacturing, aviation, telecom, ITS, FMCG, consumer durables, retail, hospitality, media. So he's been all over. He has led several corporate governance agendas, initiatives, and been an integral part of several large-scale transformation and strategic projects. His team has won several awards at the national and international level for the use of technology and analytics in internal audit. And it's a pleasure to have you, sir. Thank you for accepting our invite. So over to you.
I won't take too much more time. So just that I'm very privileged to stand before all of you. So I believe that learning is a continuous journey. So I hope that through this discussion, even I will learn. And we have tremendous experience and insights from leaders like Shiva, who head the internal audit function at large listed companies. So we'll also have a good discussion with him. We'll all learn from you as well. So over to you, Shiva, and for the rest of the introduction, and then the session we do in sort of a tandem. Rather than actually first one speaker speaking and then me trying to again repeat a lot of things, we chip in together. So let's keep it interactive. Any questions or points of views that any of you have, please feel free to share. Keep it interactive.
Okay, so I got the India map also there. It's nothing just to say that okay, my Shriram Subramaniam actually when they said that I'm finding out a different point of view, there is a small spelling error in my name. It's supposed to be Subramaniam. And there is a reason, nothing to do with numerology there. It's because I'm a hybrid between Kerala and Tamil Nadu. I was born in South, I was brought up in North. I started my career in East where Subramaniam became Subramaniam. I got married in West and now finally settled in South. Just to let you know, there's a prefix of CA there. Yes, I'm an accountant and I'm so much an accountant that in my personal life also, two very important ladies in my life, my wife and my daughter. Wife's name is Lakshmi, which also means cash. Daughter's name is Shreya, which means credit. So that is more about me from personal front today. What we and obviously no questions for these statements. Only questions are for the technical inputs. So what are we going to do? We're going to talk about internal audit. We're going to talk about stakeholder, and we're going to talk about their lens or the perspective that they have about us, so that we are able to understand, and that I guess is the agenda. Okay, before I actually get into the overall thing, the first part was internal audit. I'm going to narrate two stories about internal audit. Actually, one is a story and other is just a phrase. So there is this young guy who is writing a letter to an editor of a women's magazine. I do see few people of, probably of my generation who would actually know there were women magazines at that point of time. I know everything is probably online or whatever it is. So you had editors and you would write letters to them. So this guy, young guy, was writing a letter saying that, I am engaged to this most beautiful girl and she's the most eligible bachelorette in town. She's from the royal section. And I'm, indeed, I'm very lucky to be engaged to her. The problem is that, my father is a drunkard. My mother is kleptomaniac. My sister is a lady of night and my brother is serving parole. She knows all this. The problem is, do I tell her that I am an internal auditor? Unfortunately, internal audit comes with a particular tag that it is not the most preferred profession or whatever it is. It is okay to tell something bad about my family, but do I tell her that I am an internal auditor? And secondly, the other part is that several people believe that internal audit is nothing but a person going with a bayonet, the rifle with the thick knife on the top of it, into a battlefield after the war is over, trying to poke people to figure out who is dead, who is alive. That's unfortunately what today internal or earlier internal audit used to be perceived as. We are, only finding faults. We are only looking at past. We are only trying to make people lose their job, make people lose their promotions, and only want to be a management person to impact another person. But things have seriously changed since then. Therefore, The next part which we are coming is we are talking about the lens and the perspective part. I'm going to probably tell a small story. This is a guy actually, this is the only image which was not copyrighted that I could figure from the internet. Now this is a case where, there is a dog chasing a couple. I couldn't get the couple picture before, I just put a guy running. There's a dog chasing a couple, and that's called prompt response and corrective actions being taken immediately. So what happens is this dog is chasing, and this guy, what he does, he just picks up his wife, so that it doesn't get, the dog doesn't harm her or whatever. So there's another couple passing by there, and the wife, the other couple's wife says to her husband that, look how much he loves his wife. He is putting himself in danger and peril and making sure that his wife doesn't get hurt. He's lifted that his wife and protecting her from the dog. And the husband says, listen man, don't think he is in love with his wife. He is only lifting her to throw on the dog so that he is not hurt. So there are two people looking at the same picture and the same act and having a completely different perspective. And that's where the point is that today when we discuss, it's not a standard perspective. And this is another quick point that I wanted to make, and I just probably move quickly so that the point is made. Now there are 4 people here. I'm sure the first 3, all 3 of you must be definitely knowing, and fair chance that the last ASO planter. Narayan Murthy, Vishal Sikka. Vishal Sikka, everyone is aware? He was the managing director of Infosys when Narayan Murthy was the chairman, and Nandan Nilekani obviously was also the chairman, but he was also the managing director of Infosys when Narayan Murthy was the chairman. And ASO planter is to SAP what Narayan Murthy is for Infosys. He is one of the original founders, also on the board. And Vishal Sikka was also the managing director of SAP India. Now the reason I have put these 4 pictures is Vishal Sikka was not so successful in Infosys under Narayan Murthy. Nandan Nilekani was a super success under Narayan Murthy. Vishal Sikka was a super success under ASO planter in SAP India. Now typically it means that the perspectives of the same guy, Narayan Murthy, Vishal Sikka, Nandan Nilekani. Narayan Murthy, ASO planter, same guy, Vishal Sikka. They were successes, so therefore each one of them looked at their own managing directors with a different set of lens. And that's why it's important that understanding that the expectations will vary and there cannot be a one size fit all. In 2 different set of organizations, you will have 2 different set of stakeholders or similar set of stakeholders having different expectations. That's the primary stone that I wanted to put. Krishna, if you want.
Sure. So just to add to what Shiva has mentioned, one of the biggest key message over here, what is internal audit? How do we define what is internal audit? Now we know that internal audit is required for certain classes of companies, and that's mandated by the Companies Act. And is there a definition for an internal audit role? Okay. Is there anything which lays out that the internal auditor should do these 10 things or 100 things and these 100 things alone? Okay. So that's the biggest challenge. Like, unlike the statutory audit, okay, where there is a clear mandate and there is, I would say, a very clear expectation of what the statutory auditor is required to sign off on. Internal audit is, to a large extent, undefined in that sense to say what exactly that internal auditor should do. Which is why this topic is so important today, where we're talking about internal audit through the lens of stakeholders, because there are different stakeholders, you all understand. And I think Shiva just has brilliantly laid out the previous slide, where from the perspective of the company, you have different stakeholders who are actually going to give expectations of the internal audit role. And also I saw that many of you are from the practice, right? I think, and today all the more reason, okay, while you may get appointed as an internal auditor, or you may be asked to do an internal audit, or you may be doing it in a post-host manner. How do you define the expectation from the internal audit? What is the stakeholder looking for? So that's the crux of this session. So just want to add that, Shiva, and probably as we move along,
sure,
hopefully we'll all get a lot more clarity. Please ask questions, please share your views.
So, before I move to the stakeholder point, what I wanted to say is, internal audit itself is perceived at some point of time as, is it a post-mortem or it should be forward-looking, and therefore each people have a different perception about internal audit. And also, within your organization, you will have different people looking at the same internal auditor in a different way. So if I look at the composition of a stakeholder, I don't know whether the font is clear, but we are looking at the board, the managing directors or the CEOs, the CFO, the senior management and the process owners. These are 5 different type of verticals within an organization who will be the key stakeholders for the internal auditors. That's part 1. Part 2 is, these are the internal audit stakeholders. Part 2 is, where do you look at each one of them? You do a pitch, you want to sell internal audit, sell your services of internal audit there. That's when you engage with most of these people. The second thing you do is when you actually deliver, which means the execution part. And the last thing is around reporting. So the level of engagements are very different at different points of time. The level of engagement with the CFO and the managing director and to some extent with the board will be probably very high when you are doing a pitch. The level of engagement with the senior management and the process owners will be very high at the time of execution. The level of engagement with again managing director and the board will be very high when you are doing your final reporting per se. And also, so these are the 3 stages where you look at it, and also lastly, when you look at even, every company cannot be probably painted with the same brush or looked or weighed at the same scale. You will have set of MNCs who will have a different perspective from the internal auditors. You will have promoter-driven Indian listed companies which will have, or professionally driven Indian companies which will have a different set of expectations from internal auditor. You will have startups now. That's a big thing. Bangalore is one of the startup capitals. Now your startups will have a different expectations from internal auditors, and obviously your small and mid-sized firms will have a very different. And when I say small and mid-sized, I'm even saying, let's say organizations with 300 crores, 400 crores, 500 crores turnovers also having a different set of expectations. So now just think about it. You have an organization, let's say like a PepsiCo. You have an organization, let's say like an Adani's. You have an organization, let's say like Tata's, which still believe more around professionals running the boards or whatever it is. Or you have, let's say, a Zomato or a Swiggy, Bundle Technologies, Swiggy, or any fintech company which is starting up. Or you have, or let's say Paytm for that matter, it's a listed company, but still you probably want to call it better. Or you will have smaller firms who are doing a certain set of businesses, and there are certain export-oriented organizations also here. Now think about it, all of them will not look at internal audit together. And your CFO will not look at you as an internal auditor as a way a CFO, as a CEO would look, or a process owner would look. So when you look at the stakeholders' perception, you need to understand who is, where is he placed, and what is the stage in which you are doing. A combination of these is what is going to define how one should probably be assessing it and responding to it in that particular manner.
Just chip in one question to the audience here. And you said you all are practicing, and many of you are practicing and all that. How many of you have, when you do internal audits, okay, do you get, is the remuneration fixed by scope of work, or is it a fixed bit, or is it a time and material? How is it? What is your experience?
Based on the scope.
Scope of work, right? So there is a defined scope, and the auditor is expected to deliver that scope within that defined fee. So all the more important than expectations, because today expectations can be anything, okay? And how do you actually meet or beat that expectations, okay? In a fixed fee, because they are not going to pay us, okay, for additional, for beating that expectation. All that we're going to get is a pat on the back, or maybe not even that in many cases. So all the more important in this session, we also talk about how do you look at the expectations of different people, and again different people have different expectations, like Shiva rightly said. There are so many people who are involved in this. And when you sign up an engagement letter for an internal audit, okay, they pay you for the bare minimum expectation, but expect the moon, okay. That's fundamentally the disconnect which actually happens. And how do we manage that risk? How do we actually counter that? Okay, it's something that we will get into. And this was various stakeholders that we talked about. Also, one very important point that Shiva made, I just reiterate, is that today the expectations of different companies, and in the previous slide you saw that there's no one size that fits all. Okay, I would say less complex companies, the companies who are starting off on internal audit are in a slightly, the expectations, etc. are fairly contained, are clear, okay, what they require, etc. The large companies again are very clear because their expectation to the internal audit is very, having a world-class internal audit function, having the right outcomes, all of that. But very often, in my experience, what I've seen is that it's the companies that are in the middle, not the smallest, not the largest, it's the ones in the middle that are most confused. Okay, because the reason is that they are going through an evolution process out there and their expectations also tend to vary at different points in time from different people also. So these are things to keep in mind, and we get to the next stage.
So now I'm going to just give a very classic example, which is sort of real life also, where you have this auditor who actually, let's say, doing a pitch or whatever it is, actually goes ahead and says, listen, this is something which we all have been hearing and all have been saying as internal auditors or otherwise, is that we will identify duplicate payments for you. Let me do a, it's like you go as an internal auditor and say, let me do an accounts payable or purchase to pay audit, and I will identify duplicate payments for you. But typically, I mean, it's probably a very standard thing. We all must have gone through it in our life, and we are trying to pitch to a customer in the finance function or whatever it is. Now, just think about it. What would a CFO say? CFO would think that, my house is already in a mess. Why should I dig my own grave by calling this person? What will the senior management think? Is I have so many other fights to fight. Is this really important for me? An MD would say, why is this, going outside? Why can't my CFO fix it? So why is someone else coming and saying that I'll probably identify duplicate payments for you? And the board is going to say, where is the big picture? What are the emerging risks? Why are we still talking about duplicate payments? So this auditor here is actually nice and happy to say he's proud. He has that set of abilities to identify duplicate payments, and he or she is extremely bullish and genuinely strong about the fact that this is a genuine problem. But this is how your stakeholders are going to behave. One of them could possibly be saying, yeah, it is important, why don't you come in or whatever it is, but collectively you will have all these 4 people thinking like this. This is what we want to say, that is this the way you would want to pitch? Is it the way you would want to pitch? Would you want to pitch this guy saying, listen, I will make your accounts payable team more accurate rather than even calling it as a duplicate payment? Would you want to go and say, listen, more payments to vendors is going to impact your P&L end of the day because it is, expenses of your division or whatever it is which is going to get impacted? Would you want to go and tell the MD that, this may improve your valuation, this may improve your stock price, this may improve your profitability? And to the board, would you want to say, could we automate, could we bring in more efficiencies within your accounts payable team, whereby you can probably look at OTIF, as they say, on time in full kind of a scenario, which impacts overall efficiency, and therefore we are looking at much larger emerging risks, so on and so forth. So just to give an example in the sense that at a time of pitch or at a time of an annual plan, how would you want to really put across your point? So this is what, yes sir.
So just to add here that, see, like we talked about multiple people out here, when you actually are doing it as a practitioner, okay, and who typically signs off on your engagement letter? Who signs off on your engagement? I'd like some responses to keep this interactive. Who appoints the internal, or who do you discuss with for arriving at the scope and other things? Sorry? Yeah. Yeah, CEO, CFO, CFO. Okay, and if you are a CAE, things are a lot, you have a lot more empowerment, you have the mandate from the audit committee, and you are reporting to the audit committee or the board and all that. Here is a situation for most people who are actually probably practicing, okay, where your scope of work, okay, has been determined and discussed and agreed, and to lack of a better word, I would say dictated by the CFO and CEO or the CEO. Okay, and most of the cases the CFO actually. Okay, and the person who's performing the internal control, who's the second line of defense essentially in the company, and they dictate what the internal audit should do. But when it comes to expectations, okay, there's so many other people who have expectations, who cast expectations on the internal audit function. Okay, so again, okay, the reason I'm stressing this is that while there are multiple stakeholders, it's kind of important for us to be able to visualize all these stakeholders and make sure that even if we are actually discussing with 1 or 2 people, how are we going to establish the ask or the mandate for the internal audit, and how do you formalize that?
And I probably just add to what Krishna just said, and just to give you a background, why I'm today in a corporate and as a head of audit. 32 years of my experience in internal audit. 22 years I have been with mid-tier firms, or rather one mid-tier firm which was doing internal audit. So I have also faced some of the challenges that probably a large part of you are facing. And I'll give a very classic example. With the same thing, who gives us the mandate and who questions us. Now, there was this mandate which was coming from a CFO of consumer product company to do a certain amount of distributor or a dealer sales and dealer management. And we basically saw one case where a particular credit note was approved by the head of the business, saying that we have given them 80 lakh worth of product. It is actually supposed to go as FOC, and it's okay. As per the schedule of authority, delegation of authority, this needs to be given or whatever it is. He has signed it. As an internal auditor, when we were going through the credit notes to the dealer, we found that some 48 lakh was what was given as a credit note. When we went to check the supportings and approvals for that, we got this 80 lakh note. And we raised the issue. It was a listed company, so we raised this issue also, saying that listen, you have not accounted for everything. When there is an intent to give the whole 80 lakh free, and you have billed in, and you have only reversed 48 lakhs, 32 lakhs is an important amount, and the total business with that guy was also not that big or whatever. We felt it was material, and that is what we presented, saying that your accounting is a problem. But the business division head, the COO had approved it. The business CEO actually asked us, why the hell are we giving 80 lakhs to this person? And more than the question being asked to the COO who has given this 80 lakhs, this question was being asked to the internal auditor. And as an internal auditor at that point of time, I failed to give an answer. And I chose to say that, listen, my job was to check whether and whatever I have given is approved, so on and so forth. But clearly from that point of time, whether I report or not, we have been trying to at least look at the business perspective also, whether we report it written, whether we have semi-casual conversations with the CEO saying, listen, while we looked at it, we find this thing, what was the business logic? No one will challenge you. No one will challenge you if you ask an intelligent question saying, don't worry, this will not take away the mandate. I've seen, in this case, it was more of cutting a sorry figure in front of a CEO, but no one would mandate. What was the business reason? You might say this was the business reason. No, why did you believe this is 20%, 30%? No, that's my call. That could be still open, but when you look at the business reason, as you have something more intelligent to either put forward or to respond should that question come.
Excellent example that Shiva has given. And Shiva, with your permission, can I go back one slide? And it's probably, I would like to add a few things here. I'm sure that many of you would also have similar experiences, and Shiva has outlined a very good example of how different, like the CEO asking a different question as compared to the CFO and so on. So typically, if you look at the stakeholders, okay, who are the people who have an expectation on the internal audit function, and typically the CFO who gives us the mandate or whatever is going to expect that some of his burden, okay, is offloaded to the internal audit function, right? Some of his controlling responsibilities, is the PRS done? Is it signed off on? Is it checked properly? A lot of the checking expectation, okay, comes from typically the CFO role onto that, okay. And if you look at process owners, what are their expectations? Okay, they don't any idea what the process owners expect? Any guesses? Any suggestions? Any reactions here?
They would want that mistakes are not done.
Okay.
It is spoofing is done so that they can correct their mistakes on their own.
Okay.
The system should be made that way that it detects duplicate payments, for example.
Yeah.
And their life is easy.
Yeah. So they how do they improve their processes?
Yeah.
Is what you're saying. Sure. Very valid point. Any other experiences that you have felt? What do process owners expect when you do an internal audit? Yes, please. Yes.
They'll be more concerned whether the SOP is followed up.
SOP is followed or not. Okay. Typically, my experience is that comes from the senior management. Now, the process owners are people who are actually running the process. That comes from the senior management. Yeah.
They expect you to tell you that they are doing good.
Yeah, they're doing good. That's a good point. It's a good point. So the two experiences that I've had with process owners and Shiva, I think you can also share your views here, is that process owners, what do they want? They don't want the audit. Okay, first of all, right? They don't want the internal audit. Expectations go away. Okay, don't trouble me. I'm busy with my day-to-day work. I've got month-end reporting. I've got quarter-end reporting. I have year-end reporting. Run away. I don't want to do this audit. That's the kind of reaction. Or the second thing that you just mentioned, give me a good scorecard. Is what the process owners typically have explained. Practically, I'm just saying. And Shiva, your experience on the senior management.
No, you're actually right, and someone talked about the process on the one, and I want to narrate an instance which happened in 1995, 29 years back, in this very city in Bangalore at Golden Empire. I was leading a team of internal audit at Tata IBM, and here is this very senior finance professional, probably the controller, just below the CFO, taking me to a process owner. At that point of time, Tata IBM, all these heads of these businesses were all these American returned people, so absolutely nose up in the air and all. And the introduction he gave to her about us was, Section so and so of Companies Act requires our company to have internal audit. That is why this time. So you don't have a choice, I don't have a choice. It is the law which is asking. That's all he is here. Otherwise, he is not here for anything else. So you are right. That's how the process owners would evaluate then, and to some extent, who would want someone to come and look at my work and say I'm not doing good? As an internal auditor, when the first time I was subjected to a quality assessment review, I was also okay. I felt karma. Okay, I've been auditing so many people. It's my time to probably get audited. But you are right. So therefore, this is, and it's very unfortunate. It's very unfortunate. I'm sorry, I'm digressing. We are like those guys who do those, blood tests, check. You go into a process, check whether the automated controls are existing, you've not made extra payment, your balance sheet is correct, your books are correct, operatingly you've done the right set of pricing and everything. Very similar to someone who comes blood sample for a mass test, so your sugar is okay, cholesterol is okay, everything, right? Now, when you get that blood test report and say, fine, my fasting is below 100, my BP is around 125, you're very happy. But when you submit your internal audit report saying this area is clean, the boss says, have you done the work? No one questions the lab assistant to say, okay, have you checked my blood correctly? No, they're very happy the moment they say everything is okay. So that's unfortunately the other aspect of everything. They don't believe that their processes are fine, but they don't want any observation. So that's, just keep in mind that we will have to, and this is a reality. Therefore, when we are going and speaking to anyone, we just need to build all this in our own conversations with them and our own delivery. Just keep these in.
And in a weak controlled environment scenario, okay, sometimes the process owners wield a very, I would say, very strong power in the company, and they are very important, and they become indispensable in some cases when there's overall weak and controlled environment, I'd say. So at that point of time, it's easier to change the internal auditor, okay, than to correct the process owners. Okay, so it's something to keep in mind. Correct, or I would say change the process owners' way of working. These are things to keep in mind.
Okay, so now what we're going to do is, actually before we start, we would like to pause and take up any questions at this stage. Any questions till now? Or maybe if your expectations again, this is, we are now trying to look from your lens. If your expectations from this session would like to be tweaked and moved in a manner that you want to hear something else or something specific or something, we'll be happy to hear and curate our balance of the presentations accordingly.
See, our experience is mostly we have been appointed, as you said, to meet the requirement of the statute. At the same time, the CFO wants to see that the audit committee is being taken care with all the due questions answered.
Okay.
That is where we are in between.
Okay, so therefore, what you believe is no one wants me and just necessary evil.
Let us expect that we are the least wanted person on the premises.
The least unwanted person. However, at the same time, they will treat us shabbily, but we need to support them in front of the
audit committee, and everything has to be taken care that we have done a fair assessment job, everything is on the right side. That is the expectation. Anything, as he said, anything less than that, auditors get changed.
I think it's a very fair point, and this is where I would probably want to, sorry, I'm digressing and sort of infamous for giving some examples, work related or otherwise. So I'm going to narrate a very simple story here. Now there is this very narrow bridge in this ancient time. There is a very narrow bridge, and the king is, and this bridge is over a river, and it takes you outside the city. And the king is leaving the city, going out to figure out what's happening in the rural or country areas or whatever. So he has his entourage, he has his horse, and then 5-6 people. And there's a very learned sage coming from the other side on the same bridge. It's a very narrow bridge, only one person can pass. And the king meets the sage. He says, "Oh, great man, I'm so happy to have you in my town. I'm in my kingdom. I'll be very happy to listen to your learnings and stuff like that. Please, and I'm just going to discharge my official duty. You please, my people will take good care of you. Please step aside and let me go." The sage says, "Oh, your king, I'm known for your generosity and everything. I'm very happy to be in your place. Come to your kingdom, and I shall certainly not obstruct you from doing your official duty. I will wait for you. Just make place and let me go." King is now a bit egoistic, and he says, "Oh sage, okay, let me go." So he says, "No, let me go." So this is happening, let me go, and it's becoming now agitated and angry, and then the sage really loses his patience and says, "Oh king, you are being imprudent, I'm cursing you, you become a demon." And the king turns out into a big demon. What does he do? Becoming a demon, he eats the sage. Now, I would request you guys to step back, close your eyes, put yourself in the place of the sage, put the CEO or the audit committee in place of the king. Would you want to keep countering your point? To be right or to win? There has to be a certain amount of balance. So somewhere, I don't know how much, it's again, I'm talking from my experience. Your client could be much more tougher or trickier than what I have seen in past or whatever it is. The best way to do it is, if there are operating efficiency related issues, stick only with the CEOs and CFOs. The audit committee need not talk about it. Okay, you have identified some issue on an operating efficiency of a machine utilization, okay, or you could have bought 3 items. You've done everything correctly. You could have bought 3 items, but you bought 4 items out of it, or there is an underutilization of an asset or a resource or whatever it is. Do not necessarily need to go to the audit committee at this stage. If there are pure control and assurance issue, payments have been made, unauthorized payments have been made, or you have some systemic issues, where you can also call upon it as probably need for more budget for him, need for more manpower for him. He will become your friend. And as you move ahead, you have built a credibility with your CFO and with your board. And actually you can bluff your peers. So you need to build your credibility. And to build the credibility, the day one you go and tell the board. Because what happens is, we also, as Krishna was saying, that you hardly get a pat on the back also. And we strive for that recognition. And in that zeal, what happens is we go to the topmost person. And in this whole process, we rub everyone the wrong way. I am not saying don't discharge your duty. Nowhere I am saying close your eyes to an issue. Think about it. Is it a control issue? Or is it an efficiency issue? Is it required for CFO? Is it required for MD? Is it really required for an audit committee? And probably when we come to the audit committee in our slide, we'll also tell why we are saying this. And once you start doing that, even if it is an efficiency issue, and the recommendation is such which is going to benefit the CFO, speak it in that manner. Bring your point also in that way. When you are presenting, simply don't say excess payouts made. Simply say payment efficiencies, and then you can probably put a root cause. Budgetary constraints, people constraint, training issue, automation required, or whatever it is. I'm just trying to say, it is just that you are saying, listen, this guy, poor guy, one limb is not there. The moment you give him the limb, he will be able to fight the battle properly. Today, he is with one hand, he is not able to do, and therefore there is a loss to the kingdom. So that's just, I'm trying to answer it. I don't know how much it probably solves, because you will be aware of.
As you said, when we build the relationship with the CFO, it's time for the CFO to get transferred. The new guy comes. He's stuck in that pool.
That will, I mean, see, there is no solution. I mean, then you should probably be happy. Then, if that is the case, and if you are seeing that the CFO keeps changing, then forget it. Fight with the CFO and go to the board. That's what I'm trying to say.
That's what you are doing.
I think the point here is that I think there are a lot of challenges that we looked at all the challenges in the first part of our discussion right now. How do we establish internal audit in organizations in a certain level of authority, a certain level of respect, a certain level of, I would say, reverence within in that company, okay, to be able to effectively discharge the duties of an internal audit. That's something that there are a lot of challenges. No doubt there are a lot of challenges. And challenges are even more when we are an external practitioner. Actually, we are, budgeted. Our entire engagement is budgeted by the CFO. They put a cap on it, and they are expected to, while they probably pay us pittance, but then you obviously expect a lot from the function. But having said that, I just want to take a step back, because the area that we have seen so far are some of the challenges and some of the probably the biggest challenges of the internal audit service situation. But having said that, there are also a lot of leading companies, okay, who are actually using internal audit as a very effective governance tool, mechanism to supplement the efforts of the audit committee. Okay, to supplement, internal audit is an extended arm of the audit committee. And one of the audit committee chairmen actually made this statement. I still remember it till today. I heard this about 15 years ago, and that's probably one of the reasons why I'm so passionate about internal audit. And he said, internal audit, okay, unlike other things, okay, is not headwind. Okay, internal audit is tailwind, and it helps to propel the organization forward. It's tailwind which helps to propel the organization forward. He said this, and one more very interesting thing that he said, and he said, "What have you? Many of you would have heard this. What is the importance of brakes in an automobile?" Sorry. Why are brakes important? Only that you can drive. But he made a very interesting statement. He said, brakes, the stronger the brakes, okay, the faster the car can go. Okay, because if a car can go, when a car goes very fast, you need to have strong brakes to control it. Okay, so essentially that's the sort of a vision that he had for the internal audit function, and I'm sure Shiva in his role does a lot of things as well in great things in the way things are. Shiva, I just think I request you to also talk about how the audit committee interactions happen, the expectations and all.
Yeah, so probably we'll come to that when we have that thing, and we'll probably elaborate it. So what we are going to now talk about here is my understanding or our understanding of what is the usual focus of the various type of organizations and what are the various type of expectations which they would have. This chart is basically talking about if it is an MNC, if it is a professionally managed, if it is a promoter driven, if it is a mid-size, if it is MSME, or if it is a startup. And your right hand side is talking about assurance. How are the global standards, best practices followed? How good is my compliance? How good is my operating leverage? What are the cost saving and recoveries and business alignments? When you look at this chart, you will find that it is left top heavy and bottom right heavy, which basically means that as you look at MNCs or professionally managed organizations, internal audit to start with, they will be more keen to look at assurance. Give me an assurance. They will be more keen to look at, are my practices benchmarked with the right set of practices? What are the business practices everywhere which is there? And obviously they will be very keen on compliance. Now, nowhere I am saying that the bottom organizations are not keen on compliance, but they are probably not keen on internal audit to comment anything about. This is an expectation from internal audit. It is not talking about anyone who is low on compliance doesn't mean they are wanting to break law. That is not the suggestion. That is not the point that I want to make. What they expect from internal audit, and I'll give you a very classic example. In my own transition in the last 6 years, I was working with Adani's before I was working with Titan. So it was a promoter-driven large, and then I moved to a professionally managed. In that organization, Karan Adani, who was the first son of Gautam Adani, heir apparent, very senior person, I'm taking names here, was very clear to say, we want you to build in operating leverages. we want you to understand where my cost effectiveness is. You are very clear. In a company like Tycoon, I want you to focus on assurance. Give me assurance my processes are working fine. Give me assurance my controls are in place. All these will come as a byproduct. Now, at least they were clear that, so here it was the other way around. It was not the auditor trying to understand the expectation from the stakeholder. The stakeholders themselves came into it. But typically they were very clear to say that, listen, I want you to focus on this also, or this should be your primary focus. The same way one need to gauge and one need to probably play to what could possibly be. When you're looking at it, the same deck cannot go to two different sides of thing. So that's broadly what we wanted to talk about, the transitioning from the top left to the bottom right, where more professional organizations would probably rather focus on assurance, global standards and stuff like that. And the startups would typically want you to say, okay, how much can internal audit look at my business alignment and talk about mine? What is the problem with my customer acquisition? Can you go and do an audit of my customer acquisition cost and customer acquisition process? Because for a startup, the number of customers, the higher the GMV is what is going to increase his valuation. So he would rather want you to be focusing on those processes rather than as much as trying to figure out whether, let's say, am I taking 3 quotes for the time being? Because typically as a startup, he must be looking at every procurement. So going and telling him in a sourcing, you've got 2 quotes only, or 3 quotes only, or 2 quotes, or 1 quote only, or whatever it is, will not excite him as much as saying, listen, you've got 11 people on your call center, they are handling 123 calls a day. If you add 1 more, the average is going to be so much, so many calls missed, so many calls if you do, your conversion rate so much increases. That's just trying to give an example on how this top right moves to the bottom left. And yeah, this is, I'm sure you, sorry.
One small question, like in this only, if there is a MNC which is not purely a professionally managed, maybe like there is an Indian person who would be acting as a promoter driven company, but there is a CFO who is sent from the outside, like the parent, who is thinking to manage it as a professionally. So you have a split opinion, like CFO wants more things on the compliance side or the other part of it, whereas the organization head doesn't want to that much stress on that, rather he looks it in another way around, like not in a different state. Like how do we manage such kind of audits?
Okay, so is it a question of when you are making a pitch, or now you are the internal auditors there and he has given you a scope, it is that within the scope or within the area, where do I focus upon?
Yeah.
Very fair point. In my own view, I understand that there will be a certain amount of cost impact to start with. My own view, I would rather invest or do the work on both. And what is it that I am reporting to whom? So when you go and make a final summary to the MD, what he wants should be on the top. But at the same time, what CFO wants, also he gets. I understand that there might be, because overall they might say I'll give you only 7 man weeks or whatever it is and takes 8.5 man weeks. But in my own view, it is worth that investment. Over a period of time, they would be aligned.
I have to add here, my suggestion is that we also have to look at in your situation that we talked about, where there's some different expectations coming in. One of the most important things that we also focus on is what is the mandate for that role? Are we playing the role of an internal auditor, or are we expected to do certain additional checks based on what the management wants? So that will drive the decision, because today if we are expected to discharge the role of an internal auditor, there are some base minimum things that we have to do to see what financial propriety of things, accuracy, and we have defined that and agree that as part of the plan itself. Okay, that we may not be able to compromise. But what X person wants vis-a-vis what Y person wants, that is a certain thing which is nice to have, and we should try to work towards that without dilution of the main objectives of the internal.
And The only point I wanted to make here is typically, explain the photograph, is typically that if you are looking at, and we were still at the pitch session, we've not got into the, we're still at a pitch session, so obviously these are clients who you will want to attract and take it. Might make sense not to go in and sell your internal audit service. Might make sense to go and sell your controllership support service. Once you get in them to do, help them in reconciliations, help them in certain stock type of work, and then put a little bit effort and give them 2-3 audit value add only for that person, because you've not been mandated to do, therefore you're not hiding it from anything or under-reporting or falsely reporting. Once you do that, then it makes it, it's like the foot in the door, which is what we're saying. Very typically, if you see, and Bangalore is known for jam, so is a lot of other cities in India, if you see the auto rickshaw guy, he will just make sure that his front wheel is inside the jam. His back will automatically come out. And that's what probably just this pic wanted to say. Yeah, so we move to the execution and reporting, but any questions, happy to still deliberate. And
so is internal audit more about process audit, or is it a detailed audit of books of account, or is it again, it depends on the expectation of the manager? So sometimes they say, no, you shouldn't be doing the detailed audit of books of account, it is more of process audit. But we end up doing both.
So I'll start this off and respond to this. The first point here is that, like the first point that I made, is there a definition of what the internal auditor should do? Okay, unlike statutory audit, where you actually have a very clear 2-page or 3-page opinion that people are signing off, you know that you have the end in mind very clearly. Okay, internal audit is not the situation, right? And there are hundreds of things that you can do, but the question that you begin to think about, what are the things that we need to do? Okay, we can do a lot. Okay, but what are the things that we must do or need to do in that role? Okay, assuming that it is a role. Okay, or if it's a given scope, then within that scope. So first thing that you need to probably talk about is how do you scope and plan your work. Okay, I think the section we talked about is audit planning. The first thing in internal audit, and one of the good practices around this is, today the whole world is moving from, gone are the days when everything can be checked in a single year. Okay, everything in most companies today, even the smaller companies, everything cannot be checked in a year unless you have the budget and size of the internal audit team is almost as big as the process itself, right? To check everything is going to be humanly impossible, and that's why the concept of risk-based internal auditing has evolved. The risk-based internal auditing methodology essentially asks us to identify all the key risks of the company, and most companies are expected to have the ERM register, Enterprise Risk Management Register. While the ERM register gets into a lot of things, financial, operating, strategic and all that, internal audit can, typically what they do is they leave out the strategic part, okay, and look at the financial, operating and reporting risks. See what is the control environment, are other audits happening or other things happening which give something. What are the things where today the company needs an independent view from the internal auditor on. Define that, put a rolling plan, okay, and typically what in the past used to be a 3-year rolling plan, but gone are the 8 days, and that should also will endorse. Today risks are very dynamic, risks are changing all the time, so we can't have a very static plan. So the internal audit plan, while it has to be risk-based, it also has to be constantly refreshed, continuously monitored, okay? And then you identify what are those risks, high-risk items which have to be reviewed every year. What are the medium-risk items which can be reviewed once in 2 years? What are the low-risk items which can be reviewed once in 3 years? And what are the things that absolutely we don't need to bother about because they're so insignificant or immaterial? So you need to have a mechanism to put all this on, say, a spreadsheet or a tool, identify, plot, and then plan out the work. Okay? So that's how the planning, that will drive, okay, what the internal audit should do. Within that, what should to focus on, if Shiva was mentioning about operational efficiency and other things. That is a call that, depending on the priority of the company, you can take.
actually, I would like to, when you ask this question, very valid question, but can we just get it a little bit more specific? You said, should I look at process or should I audit the books of account? That was your question. Let's take an example. Take an example. Tell me which process are we talking about?
It can be a purchase, procurement.
Procurement. Back. And when you say books of account, what do you mean? Are you talking about vendor ledger? Are you talking about vendor payments? That's books of account. That's where my problem is. When you are looking at procurement, you should fundamentally look at try to answer 5 questions first. Did I buy at the right price? Did I buy at the right time? Did I buy the right quantity? And somewhere time and quantity are sort of interlinked. Did I buy from the right vendor? Did I buy at the right quality? This you can evaluate only when you do the process review and not the books. And now I'll come to the other problem which I have a grievance with every internal audit person in my team. Okay? Is that you don't look at the accounts. When you do a purchase order, purchasing, you take the PO dump, you take the GRN dump, you take XYZ and do everything very beautifully. You don't look at whether the inventory has been valued at the right value. You don't look at whether there are additional debit notes, credit notes in the vendor account. You don't look at when I am returning the good, am I returning from batch 1 or batch 2? At what rate did I buy batch 1? I have consumed it, but the batch 1 is 100 rupees. Batch 2 was 90 rupees. I am trying to return that batch 2, but if I don't have a batch wise consumption, I have returned from batch 1. These are what we should be looking at from the books of account. Rather than generally saying, okay, has the purchase voucher been signed by 3 people? Was it accounted for in time? No. So accounts, yes, but the correlation of accounts with operation is what as an internal auditor you should do, because that will talk about the materiality impact which financial reporting can happen on the financial reporting, as well as am I doing something by saying yes, I have agreed, this guy said a quote of 9 rupees, this guy said quote of 10 rupees, yes I have got at 9 rupees. Super, but I am finding 10 credit notes in that account which makes that 9 rupee product worth 18 rupees. So if you understand, as I said, I just gave you an example. Try to answer those 5 questions through processes and link everything that activity happens with the books of account. Don't validate the books of account. On the contrary, through the books of account, validate your operating records. That's my submission to any internal auditor.
Yeah.
Sir.
So when you say risk-based auditing, how to identify the risk and whom to engage to identify the risk, whether it's the process owner or senior management or the board or the CFO, and how to identify the risk, how to address it, and what are the ways to identify it very quickly within the time given time.
Sure. So I think within the time I'll keep aside for now, because typically if we are running an internal audit function for an organization, it is expected that we have a right inventory of the key risks. Okay, it's expected that we have a plan which is aligned with the key risks. So how do we achieve that? Okay, for the risk assessment, typically there are multiple sources that we have seen. One, if it's a very mature company and they already have all the things, they'll have an enterprise risk management framework. The ERM framework will be a great source for identifying all the key risks of the company. So that way, the internal auditor's role is, to some extent, they are not going to try to discover. You already have a risk library which you are taking on, and you also can place some reliance on the completeness of that risk library. Okay, but those risks will be at a higher level, not be at a very micro-specific level. Like for example, this payment going wrong, excess payment. It will not be at that level. Okay. So the question that first answer, one source of information for risks is your risk library. Second is most important, our understanding of the process, our understanding of the business and the process, the auditor's own understanding and experience will come. Third, we have to, you talked about books of accounts, this thing. So what are the material things in the financial statement, what are they telling us? What are the benchmarks from other companies? What are we seeing in terms of coverage? So all these things are put together to identify what are the risks, plot this, and then get into the risk-based plan. I hope I've answered your question. There's no...
But let me try and just add. So there are 2 ways to look at this. One is, let's say I am working with Titan. All of you know, and I hope you also have Tanishq as a brand. In Tanishq, what do we say? We say jewelry. And typically the basic 2 components are what? Gold and diamond. Now, is the risk, now there is a procurement. procurement is an area. Then let's now just bifurcate into procurement of diamond, procurement of gold. Are you evaluating whether procurement of diamond is more risky, procurement of gold is more risky? That is one risk based. Okay, so that's the first risk based. Okay. So I would fundamentally, the way I look at it, procurement of gold is actually 6 times more than procurement of diamond for me. But gold is very simple. I have only 2 SKUs, 22 carat, 24 carat. That's it. Diamonds, I have some 18,000 types of diamond. Gold, I buy only from banks. Diamond, I buy 20% through reverse auction, 20% through rate contract, 20% through open market. Now, this is 6x, but only 2 SKUs, 5 vendors. For me, this is less risky. Materiality high, likelihood low. There, it is materiality probably medium, or that is very high and this is high. But the likelihood of something going wrong is, because you know, it's not a typical commodity where I can say on this particular day, this cent of carat or this cent of this per carat, this rate will be different. So therefore, this is becoming more risky. So that way, first for your organization, you should have a list of auditable entities or auditable units or auditable processes. That becomes your audit universe. Then you can apply saying, okay, value-wise this is big, it has some inherent risk. And then currently, how do you see the process basis your experience? If you don't know it, you can either go to the management and ask, what do you believe are the residual risks or whatever it is. And then you can plot and put a simple grid to say, okay, materiality also high, risk also high, obviously high risk area. Materiality high, risk medium, low risk, low materiality, leave it. As some like, let's say, an admin expenses or whatever it is. That is how first you determine which areas to pick. Now to answer to the other question, on risk-based auditing also happens when we were just talking about this procurement audit. Right price, right quality, right quantity, right vendor, right time. Yeah? Now understand it this way. If I am buying something from open market, probably right price is more important than right vendor. More important, I am not saying right vendor is not important. So when you are focusing your efforts and you have limited time, you would probably want to ensure rate competitiveness as much as which vendor I am buying from. But if you are in a business which is manufacturing systems or items which is basis a customer's instruction and he says, listen, I want the chip or I want this particular product only from Schneider or these OEMs or whatever it is. There the rate is not important, vendor is important, because the moment I buy something from a wrong vendor, my entire product could be under risk. So have you understood now that there are 2 sets of risks? One is which activity? For as I said, my gold is 6x more value, but I find diamond to be a higher risk problem to me, so therefore I would probably audit that more frequently. Or if I have time only for one audit, I would choose to do an audit of diamond. Now, within a procurement audit, depending upon this nature of thing, if I am doing, let's say, buying of IT services, I may want to make sure that my prices are correct or whatever it is. But if, let's say, I am doing a, Titan has a subsidiary which manufacture spare parts for aircrafts. It's in aerospace defense business also. So there, the Pratt & Whitney guy says, you are making this ball bearing for my engine, you jolly well buy the steel only from these 3 vendors. And there, if I go and do it, the sort of unlimited liability that I am exposed to, if that part has a problem, is much more humongous. So even if I buy it at 5 rupees more, as long as I am buying within those 3 vendors that he has specified, I am less. So within that line item also, you will need to understand what is more risky. But for that, you will have to evaluate the cost. So again, I am trying to say, if you start asking what are the 10 big risks in any process, excess procurement or whatever it is, let's say we are talking about sales, rates not mapped, discounts not given, customers not tracked, lose out customer, lose out value, excess discount, wrong products shipped versus built or whatever it is. If you put those 5 questions and then you look at which runs a larger risk, which runs a, then you do your reviews and audits and you present to the organization also about it. That's what broadly risk you should go ahead. So it's not really, when you have to do a whole, if you have to make a risk matrix for the first time, it will take time. But once you have done, it is only free.
to answer the second part of the question, time element, you have a limited time, how do you go about it? Yes, I think Shivan's rightly said, see, it is a chicken and egg story. Okay? You are expected to have this, you are expected to basis this scope you're planning, but reality is that today you may not have all the time, especially if you are an external practitioner who's taking up an assignment, you won't have all the information on hand on day one, you will not have access to all the people on the day one. So that is where, to a larger extent, you may have to rely on the scope given by the company, but at the same time, in parallel, get a greater understanding of the processes, come up with your own risk assessment, revisit and re-challenge the scope, go back to the company if you believe there are high risk items which are not covered in the internal audit plan or in your focus areas, go back and discuss and agree with. So it has to happen in parallel. Unfortunately, the luxury of time is not there in today's life.
Can we proceed? Happy to take questions. And please feel free to interrupt at any given point of time.
Just to make feedback, I mean, any points or any expectations of the session, etc., please feel free to share so we can communicate to your participants.
See, while I've also worked with mid-tier firms, rather than with one mid-tier firm for a very long period of time, we take fact that where we are only talking from our experience. Maybe we have not been blessed enough to see those experiences or those issues which you are facing. And it can be because that particular point which that gentleman made between a CFO being a foreign nominee and the CEO being an Indian Lala, just to say that point, was actually a very something which probably I had also not seen in past. So therefore I am going with that, what would I do if I were in that situation? So I didn't have any real life example to probably quote around there or whatever it is. But I'm just saying, so if people feel anywhere we are digressing or going the wrong way, you can please correct. Tell us, listen, we don't want to probably hear this, or can you talk about this? So please feel free. There is no such thing that you're going to we are going to feel bad about it. We are going to be happy to take or at least know that there are these scenarios also that we can be well primed.
Just to close the loop on that example that you brought out, it's a very interesting example. So it also underscores the importance of having concrete expectations that are crystallized in a document. You need to be able to actually, the planning stage, say these are the 10 things that the internal audit will look at, and these are the 10 things that we will not look at, because nobody has unlimited budgets. So we've got to be very clear, establish that, and what we finally take up, we should deliver. So that's the important message out there. So you have to, your agreement on the final aspect should be as clear as possible.
So this is typically the 3 lines. You want to just take it up?
Sure. So this is a 3 lines model. Again, very important, especially when we are dealing with expectations which are varying. And we talked about how companies are at different stages of maturity. You have the companies which have just crossed the threshold for mandatory internal audit. There are also companies which are basically coming, like let's say you said that example where they want us to come in because there's a requirement for us to come in, but they really don't. They don't, not that they really want us there, but they need us there with the requirement. So, and in those kind of companies, the expectation is fairly clear because the expectation is that, okay, fine, this is what we need, do the bare minimum, it's quite kind of okay. Then you have the larger companies where it has to be a world-class internal audit function, and there has to be a proper, I would say, governance around the internal function and all that. So there also there's a lot of benefits and advantages. It's the mid companies which have a lot of challenge. Okay? And this slide actually kind of helps you articulate that. This is actually by the Institute of Internal Auditors. They come up with this infographic, okay, global this thing. So essentially it shows where today there are 3 lines of defense. Okay, the first line is basically the process owners who are actually doing certain things. Like for example, we have a sales function. Then that's a first line function. Okay. Then you have the finance and controlling function, basically first line function, provision of product services to clients and managing the risk. Second line functions are the controlling functions, like your CFO, CRO and all that. So am I audible? Yes. So second line functions are the controlling functions, basically your CFO, CRO, all that comes in the second line function. and it establishes internal audit as a third line function, third line of defense. So essentially you can't be the person doing the process. You also cannot be the person who is monitoring that process. That's not the role of internal audit. That's the role of actually the controlling functions. But internal audit role is to provide independent and objective assurance and advice on all matters relating to achievement of objectives. So this is a fairly globally accepted, I would say, positioning of internal audit, which we can also look at and will help us in discussions with various people to say that, hey, this is going to be our role, okay, and these are the things that we're going to do, these are the things that we're not going to do, so that there's a lot of clarity in the whole thing.
To give a very classic example, we were requested by our admin team to be a part of a cross-functional team, which was our own suggestion, to finalize the admin members. We said that it is all being done by one guy, there should be a finance representative, there should be a user representative, so that when you are hiring a cab hire or a security or a housekeeping, you have the perspective of the user, you have the perspective of a finance, and you have a perspective of a admin guy also for that. And they sort of requested us to be a part of that cross-functional team, which we said we can't be, because we are the third line of defense. We should not get executed into this. We are happy to do, once you are sort of looking at 3-4 people and you've done everything, and then you would want us to do some comparison on the components of the contract, have I missed out something or not, we can come and do it before you sign off a particular contract. But we will not get part of meeting those vendors, explaining our understanding. Just to give one very real life recent example.
Yeah, one more terminology which comes in handy when we're discussing these kind of role alignments is that internal control is different from internal audit. Okay, and internal control is what the management does. So essentially, from the governing body, you have the management, and you have internal audit and the external auditors, statutory auditors. So this delineation really helps in establishing.
Space here, you can. So now we are going to talk about audit committee. Now it all depends upon, in our organization, audit committee is the peak, but probably with the organizations that you audit, maybe the MD is the key guy. Now what we need to understand when we say they need to see the big picture. And let me give you a very classic example. Let's assume this is your audit universe. This is the size of your audit universe. There are some 50 or 100 line items: purchase, sale, warehousing, admin expenditure, IT, a lot of things. Let's say, now let's say you do 50% of that in a year. So this year you are going to do half, right? Now in one, that's your audit plan, and in one quarter you will do then 25% of that 50%. Okay. And these are typically to the size made chart. And you get, in that areas that you do in that quarter, you get 25% high risk audit. 20%. This is 20%. Okay, so you start with 100 as a universe. 50 is what you have as your audit plan. Let's say you did 12.5. 12 you did in that. Say 2.5% in the areas you've got. You typically don't get 20% of areas high risk issues, but I'm saying just to take an example. Now when you present this 20% to the senior most person, which is the audit committee or whatever it is, this is how he sees it. We are very happy. I'm telling you, 20% of the areas, if you get high risk, either the company is very bad, or I am super good auditor. There are only two reasons. You have to be on board. In fact, it is not or. The company has to be very good, very bad. I have to be extremely super duper good when I can get such huge number of issues when I look at it. But the audit committee sees it like this. That's a fact of life, we don't realize it. And if you were to calculate everything in the whole year, even then it looks like this. So we are what we believe, and when I'm saying we, this is no internal auditor bashing thing, there is no intent. I mean, I am part of that fraternity. I'm very proud to be an internal auditor. I'm just saying, this is a true. I'm just saying, let's be realistic and optimistic. And I'm just trying to be realistic. This is the fact of life. I don't do the whole world. The whole world will not have that much of problem. So when I'm talking, but it is an important issue. We talk about double payment or whatever it is, but he is looking at sale, he is looking at regulatory compliance, audit committee I'm saying. Looking at maybe some other geographical challenges, probably recovery from COVID, new BRSR rule, audit log rule, everything is bothering his mind. And then rightfully identified by doing an excellent work, we talk about, listen, your payment problem is a issue, the payment process is an issue you've done, he looks like this. So therefore, when you are presenting to them, be very clear on how you present it. And that's why probably look at dashboards and scores, probably look at control assessment trends, probably look at some reference to context and some core themes. Now I'm going to just probably give you some real life examples there. See, this is what one presents. If you have a larger universe, you talk about how many entities, how many audits, how many high-risk issues, what has been the breakup of issues, how has the control assessment gone, if you would normally rate him on a 1 to 10 or a 1 to 100 or a 1 to 5. If you have these parameters, if you don't have it, probably that's a time you start putting it. End of the day, he would like to say, listen, tell me, where am I in a 1 to 10 scale? Give me that assurance. Or you talk about area-wise, where how many problems of roles and responsibility, or existence of policy. Give him a theme, saying that, listen, for the last 3 quarters, I have been seeing a consistent problem of user access. Maybe it is time that the company goes through a comprehensive review of every user access. For the last 3 quarters, I am finding this problem of warehouse and sales team not speaking to each other. Or you can word it nicely, roles and responsibility or what. Or you can say, if it is a more, let's say, startup, you could probably go and say, listen, you have been launching your initiatives or your new products or your new pages without a proper sign-off from these 3 people, and this is creating a lot of problem. So would you want now to say that any new launch of a new screen should go through this technical content and maybe a finance sign-off on values or discount rates or MRP or MOP or whatever? Do you want a toll gate? One point you say, let's say in Swiggy you will say Instamart page problem. Second time you will say Amul cheese rates not correctly put because you don't have a sync with the supplier. Or you will not change the MRP, therefore the discount which has gone is wrong. Pockets. Can you look at a root cause to talk about it? Sorry. Probably try and put, this is a very classic case I'm saying, probably try and put them, as I said, buckets. And we're talking about an employee database. We talked about issues in sales incentive payouts. When I said that, listen, you are saying this guy has achieved so much sales, but this guy was actually working in some other store. You're talking about employee files not being there. We talked about Mediclaim. This person, company gives it post-retirement also. Are you even going and checking whether the person for whom you are taking post-retirement, is he alive also? Are you taking a life certificate? Are you confirming his person? Or you're just adding every year? Or this is an optician and you had contract labor going there or whatever it is. So all these are different audits, but they are all having a common root cause that my employee database is not correct. The other part, someone said, process owner wants clean report. I think one of you gentlemen said, yeah?
Good report.
Well, good report is clean report, right? So which is what? What do? We send exceptions. You say in 30 sample cases I found problem in 2, or in 200 sample cases I found problem in 27 cases were not approved by the right requisite authority for sales discount. Something of that sort. We never write in 200 cases I actually found 173 cases to be correct, which is okay. We are supposed to be reporting exceptions, but if you were to provide something like this, and again this is a real life example, I have not created it, it's an actual real life example presented to an audit committee. We are talking about concern areas. This is a slide to the audit committee. Hey, this time we have issues on control, we have issues on compliance, IT, and these are the opportunities. And not even talk about the opportunities, just to say that internal auditors have identified some opportunities. And these are the bright spots I have seen. What have I seen in cyber security bright spots? What have I seen in eye care? What is a business warehouse issue? What do I have seen in HR? We are saying, in HR we are saying proactive corporate HR interventions, which means in that quarter we saw 25 new policies being put by HR on addressing something. We just called it out. The business is happy, function is happy, I am not taking off anything. But if I can say one good word about that person in the audit committee in writing, I should have that guts. If I believe my work is up to the mark, I should have the guts to tell them that this activity is working fine. You have friends for life. You are not compromising on anything. So this is what we were probably wanting to say. As an audit committee, please try and understand what we believe is big and what is in their platter, in their share of mind, is much bigger than what we think is big. So it's very important to put ourselves in their shoe and talk about trends. Talk about, give them that comfort. Don't say there is a problem. Listen, I have looked at your 20% of the processes in this 20% of the, and it can have a beginning to start with. 20% of the processes you are scoring 5 out of 10. If I were to apply the same lens on everything, you are a 5 out of 10. Next time you have done another 20%. Say today at 40%, you are at 6.5 out of 10. Let me apply the same thing for balance 60%, 6.5. As you progress, you can say, listen, 40% I have done now, I am saying you are at 6. 40% is not very old audits, recent audits, you are at 4.5. 20% you are actually at 2.5, but listen, I can't give weightage to it, so therefore I am looking at it this as an average, so therefore your company is at a 5.5 score. You need to put that template in place, you need to put a little bit of maths. The biggest challenge you will find, because this is audit committee which will like it, your process owners will fight. Is with, why did you give 2 here, I deserve 3, why did you give 3.5 there? But best part I am telling you, and I will not name the company. This company is a listed company. It's not a telecom service provider, but a... Now?
Yes, sir.
Yeah? Okay. Just... So, this company did a very smart thing. It went to the audit committee and he said anything above this threshold is high risk and we will bring it to you. And they knew, and this auditor, I really appreciate this internal auditor, he knew that there will be only 1 or 2 points which will ever fall into this zone, and there is no way, how much soever can a person bring 2 crore to 1 crore, let's say, when 2 crore is really a huge thing or whatever it is. And that way, once they have signed, what you are bringing to the audit committee is known and signed off. Therefore, there is no subjectivity or whatever it is. It was focusing to the audit committee also on a lesser, areas per se to do or whatever it is, and it was a signed in. So one could look at a signed off perspective. We went to the audit committee here. We went with a signed off perspective. The audit committee came and said, "No, you are being too lenient. You reduce." And we reduce that, and the business sees it. Then it becomes easier. So if you do it on your own. This is my judgment. I will give you a 3 out of 5 only. You reserve that right also. Reserve that right also. While this will be the template, I will, and if you are being fair over a period of time, no one will question. But it is important that for audit committees we share, perspectives like how would you give him a reassurance, and what could be the top 3 messages for them. Gentlemen, I think you should send a mandate to the company to say, please revisit all the roles and responsibility, especially where it is a handoff, sign-off between, as I was saying, warehouse to billing, or IT to business, or finance to new rollouts, or whatever it is. You send those 3 messages, that is what they want to hear. And we take a pause now, there's a tea break, and happy to converse anything within the thing. Should we start? The neighbors are all accounted for. So now we look at senior management. Now again, as I'm saying, for some organizations, the audit committee might be the senior management, and the senior management will be the next level of people who are probably more keen on the operating efficiencies part of, how they see it. If you remember the first point when we said the auditor saying, I will figure out the duplicate payments for you, and the senior management saying, I am already having so many fires to fight. What is this going to help me? So this is purely more around business per se. They probably look at only root cause and solution. They are not so keen to understand the problem. 60 to 70% of the time, they would actually know the problem that you are talking about. They are very keen on knowing the root cause and solution. I'm going to take few practical examples, and this I've done it personally, been involved, so none of them is a fictitious example. And it has been primarily done, both from as a practitioning person going to a customer and client and doing it, also as an in-house. So this was a snacks manufacturing company, and they were having extreme amount of sales returns. And initially, like a traditional internal auditor, we also went and said, your sales return is high in the market, and we felt that we are doing super duper good job by saying, okay, the market is around 3%, you are having around 7.5% or 8%. And this is leading you to loss of sale and reverse logistics of cost of dropping it and then bringing it back for no sales and everything. But then the management one day called us and said, listen, sales returns means this is wrong sales. Wrong sale primarily has one reason, that you dump sales. So the sales guy can achieve his targets or whatever. Now we are in a completely cash and carry. So here the distributor is paying the money and picking it up from me. So there is no way it can be sales. I mean, the distributor can say, what you want to sell to me, I will not pay the money. Can be one story where you can do the dumping, but here he is paying the upfront advance and taking the money. So we are flummoxed as to why this is happening. And so they said, why don't you do the audit again and actually come back to us. They were kind enough to put this question to us. And then we sort of did an extreme amount of data analysis, but everything in Excel. We also didn't have that kind of tools or whatever. We tried everything. Customer-wise breakup, product-wise breakup, upcountry versus city, vehicle type, I think distance, and whole lot of analysis we did. Any and every variable that we could figure out and try and figure out whether there is a pattern, and we couldn't find any pattern. It was almost equally spread across everything. Except for one thing. Dispatches which were happening in the evening from 4 to 6 had maximum number of routes. We even went up to a loader level thing, we could not find any pattern, but only pattern we had was dispatches between 4 to 6 or 4 to 7 or whatever it is. And we were also in charge of doing their CFA checklist audit, housekeeping type audit, in which 167th line item was how many yellow bulbs are there and what is the percentage of yellow bulbs to the CFL bulbs, because they had mandated that everyone should have CFL bulbs more from a sustainability and all that, energy saving and climate change and all that stuff. From that perspective, they had mandated. Then they had built in that cost also in their one-time cost or whatever it is. And we saw that that was poor. And then we did a little bit more probing. Something struck us or whatever it is. We did a probing. So what happened was, this company would sell four same type of snacks with different flavors. And earlier it was making the carton box for each of those flavors separate. In order to optimize that cost, they said we will have one carton box which will have all the 4 flavors printed, tick against which flavor is inside that box. So we went to the plant because that's where the issue used to happen. We found there was no problem there. We actually sat there for 7 days. The trucks would be packed, then we would stop, open it to figure out, has he ticked the blue flavor and inside is a red packet of it. That was not the problem. So therefore, when we came back here, we realized that after 4 o'clock, the sunlight is less. And in yellow light, they were unable to, the loaders were unable to identify which color has been ticked. So he would normally, inevitably end up picking a wrong packet and putting it. And the security was not doing a typical build versus shipped activity. He would only say 35 packets, 35 packets. And when the product would reach the customer, he'll say, I asked for red packet, you sent me yellow packet, take it back. Now starting from a fact that benchmarked, evolved internal auditor to say that high returns against market benchmark or whatever it is, to this thing, yes, there was a mandate. But all I'm trying to say is, as internal auditor, maybe we could not have gone up to this extent, but the first level expectation itself from the senior management is usually the root cause and solution. I'll take another example, and this is an extreme example, but I'm just trying to say this is really extreme. There are many, and I'm trying to pick up probably the best ones per se to say. Now this is a typical case where this is a way a coal comes in a ship. Imported coal comes in a ship. This is called a hatch. And what happens is, if you look at it, everything inside is coal. And this crane is what goes in, picks up the coal, puts it under a dumper or puts it on the conveyor belt. That's the process. Now what happens is, once it has picked, it can't move. It can move only in this direction. It can't go here, 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 here. This out. So what happens is, the coal inside or on the peripheries, people would actually put in a excavator inside or a JCB, and he would push the coal to the middle. And this crane would then pick it up from the middle. Now, the company was very smart. It was saying that I will pay everything on per ton basis. So it said that, okay, this will have 500 tons, 250 will come automatically. For the balance 250 tons, you will have to push it in. Overall lot is 500 tons. So he will work out the number of hours the excavator would work and divide it by 500 tons to say per ton, this is what I will give. When the unloading happens, whatever number of tons happens, this is what I will give. Now, consistently we were seeing some problem or the other in the, and there was no mandate, in the vendor not delivering these trucks on, or these excavators on time. And then we went and we spoke and we did a lot of things, and then we figured out that he is saying that the rates agreed is not working out for us. And the procurement team says, no, we have done everything to figure out this is what it is. And then we went back. And then we figured out that there was one change in the business approach of the company. Earlier, it was having only these full loads which were coming. and the berth occupancy was less, which means if I had 3 berth occupancy, I would getting only 40% or 50% of it being occupied over the period of time. In order to increase the berth occupancy, what this port did was, it said, okay, let there be coal which comes to port A, and from there let it come to me. Okay, part of it is loaded there, so the customers are happy because it can go there and then come here, he can distribute his cost and dependency upon port. The customers were also happy. We were also happy because I was getting much more occupancy apart from the full loads or whatever it is. Now, what was happening was, I was paying for, so imagine this, when I was taking 500, for the first 250 the excavator was not working. For the balance 250 the excavator was working. So let's say I worked out 1 rupee per ton, which means he was 500 rupees is what he was getting. Now, this port has offloaded somewhere else. Only the balance 250 comes. Now for 250 he has to push. And I was still paying him 1 rupee. So earlier for that 500 also, he was pushing only for 250 because the first 250 came easily. Now unfortunately that first free 250 went to someone else. And therefore he was saying my cost is down. This was a good point, very valid point. Cost needs to be increased. We went back and said, yeah, okay, so the last second 250 I have to pay. How many times did this vehicle come first to me? When it first came to me, I would have never used the excavator, but I would have still paid 250. So when we went back to the management saying, hey, this guy is cribbing, but there is another guy who's probably being put to use. So it was a very, very smart move by the operating guy who was, taking this vendor, favoring this vendor to give him always the full, because there was never any activity there. And another vendor.
It's fine now.
And where was the management having a problem? Management was having a problem because the delay in unloading. Delay in unloading was leading, because the second vendor was not servicing. Delay in unloading was leading to what? Delay in customer getting the coal. Delay in the thermal power. So delay in customer getting the coal and the thermal power means he was cribbing on his KRAs and all. So it actually starts from a sales point and comes down to a vendor favoritism. And again, process. If you are looking at a sales audit, is customer KPI being met? Customer KPIs are not. So I'm just taking this example. You would have all heard about root causing and 5 I's you heard. You ask a question why. And I'm going to ask a very fundamental question to you. Why was Ravan killed? Anyone wants to give it a try? Why was Ravan killed? Would you believe that Ravan was killed because of a quality issue and not the quality of his upbringing? No. Ravan was killed because of a quality issue. How many people would be able to agree to this? Or kind of find a... Okay, so please humor me and tell me, for your understanding, why was Ravan killed? Okay, sir. How many people know Ravan? No, I mean, I'll be very honest with you. I had this conversation with some of my team members and they said, yeah, because he kidnapped Draupadi. Real life people have. So tell me, why was Ravan killed? Anyone wants to give a chance? Now, you want to give a... No. Why was he killed? What was he greedy for? Because he abducted Sita. Why did he abduct Sita? Please try and understand, I'm going the 5 why way, okay? First why answer, now I'm asking the why for the first why. Huh? Okay, why did Shupnaka complain? Rama did not marry her. Was it Rama did not marry her or was it that Lakshman cut her nose? Why did Lakshman cut her nose? Because she attacked them? Why did she get that courage to attack them? Because they were alone? Why were they alone? Because Dashrath sent them to forest? Why did Dashrath send them to forest? Huh?
Because of his
Because of Kaikai?
deal.
Right. So because of Kaikai sent, asked Dashrath, why did Dashrath agree to Kaikai? Because Kaikai saved him in a war? Okay? Why did Kaikai had to save him from a war? Because his chariot broke? Yeah? Why did his chariot broke? Because someone in that quality department did not do his job. It's a good thought-provoking point, but to say, do you really ask that 5 whys? That is what the senior management wants. Please go back, and I'm saying I'm equally responsible and equally culprit till about 5-7 years back, and even now 20 to 30% of my reports also carry this lack of SOP, absence of direction, lack of clarity, these root causes that we write in internal audit. Good for an internal audit report perspective. But when it comes to a conversation, it need not be documented if you have a concern in documenting it. But when you're having a conversation with the stakeholder, when you're having a conversation with the senior management, you have to go and tell them, this is the root cause. This was the root cause. A vendor favoritism was a root cause for a customer charging you penalty. So I am going to come back, this is not a real life case, but just to stress upon my, even when you talk about certain observations or whatever it is. So let me ask you this question, how many of you have heard our grandmothers or elders in their life in house saying that don't cut your nails on a Thursday evening? Yeah, you guys have heard it?
Yes.
Why? Why do they say that? Any idea? Sorry? Night.
Like you want to have light.
Okay, so why not on a Wednesday? They always say Thursday.
They heard it from their grandfather.
Yeah?
They heard it from their grandfather.
They heard it from this end. So, in today's parlance, the elders, smart elders, inclusive elders, considerate elders ask us not to cut the nails on a Thursday evening so that it is easier for us on Friday to open our Coca-Cola cans and chips packets while we are partying. The point again I want to make it, maker-checker not there. Segregation of duties. Unless and until you explain them why, chips, Coke, even a beer, if you don't tell them that, they will not appreciate a segregation of duties so easily. And because there are some standard, 4I principle, maker-checker, segregation of duties, there are some standard. Vouchers not signed, system log not there. We do have these observations, right? And we believe, yes, and it is an important observation. As a good auditor, we must identify, highlight it. But to the senior management, unless and until we tell him the reason why this should, how this impacts their life, it doesn't work.
Sure. I think excellent examples and really.
Sorry,
Please go ahead. Please.
Sorry. Yeah.
Sir, it may not be viable each time to going into the root cause and finding a solution. Let us assume that I've been assigned 10 days for a particular audit, and I've been budgeting so many manpower, man hours for so and so audit. Like you said, you took 7 days to find out why there was a delay in transportation. But in each audit, if we keep doing that, it may not be viable. How?
Absolutely. I'm not okay. So you're bang on. You're bang on. You're not there to make charity or make them make money. You're there to make money for yourself.
And the second, we stay 2 days extra.
Let me just. Point is valid. Let me put it this way. Okay, and it is very important. Why do all these startups? Why did Ola and Uber? Since when are you using Uber?
4-5 years.
Huh? 4-5 years? 5 years back he was giving you good discounts.
Correct.
Today you are still using it, you are not gone away because the discount has not gone. So I am not saying do it for all your audits. I am not doing in one audit where you have 10 days, do 7 days. Make an attempt. The moment again the auto's front wheel. I am not saying do it in every audit, that is harakiri. Not saying that. Make an attempt once. Tell the senior management, he knows you. He knows you, and now he is going to give you that additional time once you start seeing that. You're right, this gentleman was saying there are some organizations they just want you as a ticket box. Don't go and do that. But I'm sure every organization is not just like that. But where you believe the management is receptive, and the management, go for one, go for two, smaller ones. And I'm telling you it's okay. Let me be very candid with you. You've done this audit in 10 days, you know this is a problem, try and steal half a day from every next 5 audits and try and do this. Even if you go after 2-3 months and seek time, let your partner or whomsoever seeks time with them, and does it even after 5 months. You know, we came back, we went, we saw this, maybe this could be another reason.
It is a continuous.
Huh?
It is a continuous process.
It is a continuous. See, end of the day, you are also getting them used to a particular quality and delivery. The kind of discount that a Big Basket was giving or a Swiggy was giving earlier, they are not giving it nowadays. But we are still using it. That investment has to be done.
So I think, just to add on, your point is absolutely bang on. You can't do this for every, and Shiva's response again is bang on, that you can't do this for every observation, right? But I will also request you to consider another possibility, which I was going to speak about. Today, okay, there are very often in most organizations, there are enough indicators for something going wrong, okay? And it's extremely important for us not to look at issues in isolation, but look at connecting the dots. Okay. I'll give you an example of, a real example of what I've seen. So this, in a branch audit, a plant audit, people auditors go there, they do a review, okay, and they come back. One of the observations which kept recurring in that audit report was shortage of packing material, okay. Packing material which was supposed to be X quantity was X minus some quantity, and this is a common occurrence which is actually happening. And management response from the plant will be, no, we will take physical verification, these are the general differences, it is sitting in some other warehouse, etc. But then when we actually looked at it over time and over some other indicators, when you put to look at some other indicators, like for example, the security agency is the same agency, which has not been changed for a long time. CCTV cameras, even though there were internal audit recommendations that CCTV cameras be implemented in certain places, is not happening. When you put all of those things together, you get a kind of a picture. And actually what happened, what was going wrong, was that actually unrecorded production, unrecorded sales, okay, resulting in actually shortages of certain things, yield was being played with, and all that. So while we cannot go for root cause solution for every observation, we should also have the ability to actually look at A category observations, go hard at them, and exactly the point Shiva made, make an impression with that. Don't miss the cost of missing an important perspective or an important risk is higher than covering a lot, okay, and having very small observations. Okay, the cost of missing a bigger issue is much higher. So I think it's not easy. Again, I'm not saying it's easy, but sometimes we may have to keep our eyes on that the bigger picture that Shiva had mentioned in the previous slides.
Process owners. I think we owe to the process owners also. If anyone curses at the maximum, it is the process owner. And therefore, in this particular case, I typically do not have too many technical examples, but my recommendation or my mantra has been take minimalistic time for the process owner. Be cognizant that he is not paid to get the audit done. His KRA is not to give you data on time. No process owner will get a bonus that he serviced the auditor's data request on time. No process owner is going to get an A rating if he explained the process in the first book. It is not his KRA. Therefore, he is not going to get time. Yes, he will not be rude, he will not be absurd, some are, but what we have to make sure is that we have all our questions put up correctly. We make sure that we know what are his blackout windows, when he is not available, when he is available, what is convenient to him. Sometimes someone will be unreasonable saying come to me after 3 months. That is not acceptable also. But overall, you need to engage, which is what I said. It is the engagement with him or her that needs to give adequate time for resolution. This is not like the ace of spade that you are keeping close to the heart and playing it just when the right deal comes in where you have maximum points coming in. Give him enough time for resolution. And what I call as memo, meet enough, meet often. Please go and have a cup of tea with him. Please have lunch with him. So initially he will be a little bit diffident, resistant or whatever it is, but still make that attempt. If not with them, next one. Obviously one thing I have not put it here, enemies, envy is friends. So if you are doing operations, go and talk to the sales team. If you are doing hiring, go and talk to the business team. If you are doing accounts, go and ask to the procurement team. Sir, all our payments are late. So I know, okay, this is very, I'm going to visualize in a completely different way. This is not a technical example. It is more of a, some other experience and just to stress on the need for time. How many people have traveled by train in a 3-tier sleeper? Many. 3-tier sleeper, not the AC, okay? So you, I mean, I don't know, but if it is usually a longer journey or night journey, you would have this chain with which you will tie up your luggage so that no one steals it or whatever. That lady is laughing. You've gone through it? You've gone through that phase, or you're finding it absolutely ridiculous concept? Okay. That's Gen Z for us. Okay. So, now imagine this is a guy who gets into the train, he's settled down, coach S3, 25, got a nice side window, and he's, put his bag in from his smaller carry bag. He opens and he looks after it. He doesn't find the chain. And then, oh, I kept it on the table, I forgot to put it back in the chain. So, and there is this guy, vendor who's coming, chain, soap, paper soap, chain, playing cards. And he said, sorry, it will be a little bit Hindi, I hope you don't mind. हाँ भैया chain है? हाँ है ना साहब? कितना 200 रुपया. क्या बात कर रहे 200 रुपया? 50 रुपये में देते तो क्या बात कर रहे हो साहब 50 रुपये में नहीं 200. Is you got enough time, you just ignore it. Now you're sitting there looking for the next guy, the same guy comes back, chain, paper soap. You have ego. I will not like 200 rupees no. So again you are looking for someone, everyone else comes, a tea vendor comes, a apple vendor comes, a magazine vendor comes, this guy doesn't come. But again the same guy comes and says chain, paper soap. Now you are also getting jittery because you know this. There are so many people who are going to board this train. This route is notorious. You got some precious stuff in your bag. What are you going to do? So now the first horn has been blown. And now you're craning your neck. Obviously there are grills, so you can't even crane your neck out much. And you're seeing, and this guy is also looking at you. And he says, "Hame kitne mein doge?" So he says, "Acha sahab, 150 No, 150 But by this time what's happening is, you're saying, "Kitne mein doge?" Your hand is already on your wallet. You have committed. The train has had the second time the horn blown. So finally he says, "Acha, okay, 50 rupiya mein le lo," or whatever it is, and you buy it, you pay it, and as you are paying, the train has started moving. Deal done. And bargain, what is the definition of a bargain? At the end of which both parties feel they have cheated the other. So you've got a good bargain here, and you open this chain, you are tying it, and flash, the chain breaks. And you have no time. Yeah. And look at that guy. He is smiling. I have given a broken chain. Note is wrong. So unless and until we give enough time for a resolution, if you are going to do all these activities in the last minute, I will not issue my. You know what? If I issue my issue sheet and give my examples, he'll correct it all and come back with approvals. We have that fear, we have that insecurity. So we've started doing one thing. If I find 10 examples, 10 exceptions, I'll send only for 8. And he'll make one formal approval note for that 8 only. Then you say, what about this other? It has worked for me. in life. But what we fear today is, we'll give it today, he has enough time, he will correct it, he'll show all approval documents, and therefore our point will go, and we will have to give them. We have actually now in our company started training all the process owners on the audit checks we do. Much against the wishes of my team. So if you tell them they will do everything, it's absolutely fine. End of the day, what is our objective also, that the company doesn't make those mistakes. But I'm not saying day one go and do this charity. First we'll have to establish our credibility or whatever it is, but you'll have to give them time. Whatever fear you have, and in fact today we were having a conversation with Arundhati, who was the chairman of SBI. She had come, there was a session, conference happening in our office, and she said one thing very brilliant, and which probably I want to quote as an example here. So they had some old ladies means their age people who had met for some sort of kitty party or whatever it is, and they had got some gifts or something, and one lady gave it to all of them, and somehow at the end of the party they realized that there was some jewelry or whatever it is which was missing, and it was in the same bag where there were gifts for everyone. So they tried to figure out, I'm cutting long story short, they tried to figure out, they could not get anything. She had to go back to Pune. She went back, and after 5-6 days she sort of called up and told her I found it. The most stupid thing, it was lying there. I had kept it in a yellow pouch, and I was constantly looking for a yellow pouch. I forgot that at that yellow pouch I put it in a white bag, and there was a white bag there. When I was opening, the point is that if you are looking for a solution, don't look at the yellow pouch. Don't fear that the person is going to get those approvals. Look at a solution of how do you keep your point, as well as give them the time. Look for the solution and not the thing that you are searching for, or rather the problem per se. So that's the only point. So therefore, the request is again that give them enough time for resolution, and don't take too much time of theirs as you discuss the process owner. That's the only mantra I have seen actually works with the process owner. Nothing else, in my view, has sort of helped to garner a better relation. Over a period of time, when you realize you're not just making issues or whatever it is, and I'll tell you, always keep these 3-4 bargaining chips with you. Irrelevant points, small points, doesn't impact anyone's health, keep it. And in the final discussion say, okay boss, I'm leaving these 4 points. Have conversation with your managers on this. Please, I'm not just saying as starting point, take this call, you may have probably drop a heat. The manager might have a perspective with some other thing as connecting the dots are concerned, but have those 4 bargaining points. Similarly, there are 1 or 2 problems which is just a question of routine approval. Tell them, this is not there, please approve it. If you don't get it approved, I will raise it. And don't even raise it as an issue for them. But absolutely low risk issues in consultation with your managers or your partners, whoever has a larger perspective about that organization or that process owner. But you do that, you will make friends with them, he will come out openly to probably support you. You will get good words from him for a CFO also to continue with your engagements, to give you a fee hike, increase your mandate, and you are making a much larger inroad into your plans.
Just to add here, I think one of the things that has, Shiva actually given an excellent example about reporting on bright spots. Okay. And that is at the audit committee level, and that really makes a huge impact, because you're not just reporting on negative things, you're also acknowledging certain tangible improvements that have happened in the organization. And you actually brought up the example of process owners actually talking about getting a favorable report or something which having a positive. While we may not be able to have that as an objective, but what I see work well is, can we also look at, wherever that particular process that we are auditing, what are the areas that have improved from last time? What are the areas that have deteriorated from last time? So and you have this, especially when you're repeating the audit for the same area, you have this advantage of having the previous report. And you're saying what is the exposure and impact in the previous report for that particular type of an observation? What is the exposure and impact in this current? Has it come down, gone up? Have they taken actions and still there's some risk? So this kind of, I would say, comparison over a period of time will help you achieve a certain perspective to the reader. If it has deteriorated, no way we can't mince words, we have to call it out very clearly. But if there are areas of improvement, we can acknowledge that also. The other thing that I've also seen to the point that Shiva made about, definitely no process owner's job or primary KRA is to support the audit and give the auditor the timely information. And this is a real challenge that we have seen across various places, right? So one thing that has worked well, we've seen, is that can we build a scorecard at the end of each audit report, or you have your internal audit report or whatever? Can you build a scorecard at the end? Okay, talking about when did you start the audit? When did you ask for the information? How soon do they give that information? And how much time they took to respond on the queries and clarifications. You start building that in the respective report. The next time you do the same audit, again you'll be able to trace as whether an improvement or a deterioration. So one, you're able to, if some particular process or a unit or a branch has actually done well, you're able to put that in perspective and acknowledge them. That's also positive motivation. People who have not done well will get that negative motivation, because you can call that out in your senior management discussion, saying that, hey, this audit got delayed because of these reasons. And the cost to audit, so you also be, senior management definitely appreciates that people have to give things on time.
So summarizing, audit committee, focus on big picture, dashboard, trends, balance between assurance and value addition. That's the balance. Senior management, focus on root cause, look at process KPIs and KRs. It's a very important aspect. We were doing our spectacle eye care Titan I Plus warehousing. Yes.
Sorry, with whom we have to spend more time? As an internal auditor, with whom we have to spend more time? You said like process owner, don't spend more time with the process owner. Whom we have to engage more? Senior managers.
See, okay, so let me put it this way. You will spend definitely maximum time with the process owner. Okay. Less time with the senior owners and obviously minimalistic time. But that doesn't mean in a 1 week audit you will spend 1 week with him. It's relative. If you are saying whom do I spend more time with? Obviously with process owner. It is not spend more time with senior management and less time with process owner. All I am trying to say is, when you are working on an audit, how much is the right time? You can't expect him to be always available with you, and therefore you should be cognizant and say, okay, if I have to take 2 hours, can I possibly make it more structured to do it in 1.5 hours? That is what I am trying to say. Not that you spend 4 hours with the management and only 2 hours with him. If you are spending 2 hours with him, probably 30 minutes with the senior management and only 5 minutes with him. That's what basically the point is. So we talked about this is I was telling, so Titan I Plus. Any logistics audit, you fundamentally look at cost. Cost of transportation, cost per delivery and stuff like that. When we went and asked them, okay, what is your KPI? He said, I have to deliver the spectacles to the customer in 2 days. If he has given an order in my MG road, or let's say Annie Besant Road in Patna, on 1st, the lens has to be manufactured at Chikbalapur and delivered to him by the 3rd. That is my KPI. In that particular case, we focused more on the processes of manufacturing, scheduling and dispatching, not as much as rate validation, load clubbing and stuff like that. Because for him, even if there is 1 spectacle, I will not wait for 3 more spectacles to come from Patna, order and send him after 5 days. That customer wants his own spectacles in 2 days. So that's the process KPI and KRS, and we have to be very clear, which is where your risks and the areas to be checked will come. More focus on value addition with adequate focus on, so here it's an assurance combination with value addition, here it is more focus on value addition. And lastly, we need to be conscious of their time. Take periodic inputs from process owner and don't keep the cards, don't play with cards on your chest, play it openly. It will, see, 1 out of 10 you will get a very, very nasty process owner. For that, don't treat the rest 9 also like that. 9 people are nice, treat the 10th one also believing he is nice. Okay. So assessing I is in front.
Interesting. So we talked about many things about reporting and planning and all of that. So question that probably logically arises that we all talked about how challenging it is to do internal audit in a complex environment, dynamic environment where everything is changing all the time. People, companies dealing with its own problems, and even if you're doing an internal audit for, say, you're covering so many processes, you work hard through the year, okay, and then because of you may have had one situation where you did not have a good outcome with the process owner, or something went wrong. The entire perception of that entire year's work is becoming challenged. Or, for example, you had an observation which did not resonate with the senior management, or you had an observation which did not resonate with the audit committee, whatever it is. So you put in so much of hard work through the year, okay? And how do you ensure that the perception is managed? Because that's extremely important again, right? You can't wait for the end of the year, okay, to manage perception. Perception is extremely important again, and I don't mean perception in a bad way. I'm saying that in the right way, in the sense that to make sure that the right perception on internal audit is available. Because you might have done 10 things right, but because of one thing which maybe that they had a different point of view, or they have a strong auditee on the other side, you should not get challenged. So essentially, you have to be able to identify the expectations. The session's title is Expectations and Internal Audit Through the Lens of the Stakeholders. We need to be able to identify and articulate those expectations and objectives very clearly right at the beginning. Just imagine, okay, if you had the answer paper, or you had the question paper, for the exam. It is so much easier, okay, to get a good outcome, right? You study so hard. We've all been through CA exams. I'm sure that you know how difficult it is. You study so much, okay, and then the question paper is going to be something random, okay, and you're right to that. Okay. But here's a situation where you have not only the question paper in your hand, you have the ability to set a question paper, okay, because working through the year, okay, if you define what are the KRAs that internal audit should achieve, what are the things that expectations that various people have given, what is the expectation that our function is setting for itself, okay, to start with. Put this all in a charter, or put it in a place, or a scorecard or a dashboard, and work towards it. Then tomorrow, you'll be able to, at the end of the year, you'll be able to say, this is the value that internal audit has actually delivered. And that kind of leads me to the next slide, which is elevating IA's impact. Okay. Especially when you're doing a long-term internal audit, say for a year or more than a year, you have the ability to define the objectives, work towards that. You also have the data from all your audit reports. You also have data on what things have got implemented. And when you put all that picture together, it's a very powerful message. Okay. And with the senior management, with the audit committee, it's clearly the demonstration of internal audit's value, which very often in most cases is far beyond the budget for the internal audit. The benefits are actually much more. And if we work towards presenting this, then the perception is very well understood.
So we are sort of coming to concluding our session, and there are just a couple of things I wanted to further add. These are more around an internal audit approach. Maybe it is not as much as stakeholder perspective, but someone talked about process compliance and all, yeah. So yes, again, Ramayana comes into picture. I guess everyone can figure out what this picture means. Yeah? You heard of SCMs, risk and control matrix? Everyone heard of risk and control matrix? Yeah? What is risk and control? You write a risk and then you define a control and then you test the control, right? This is the first example of a wrapper. The risk was Sita will be kidnapped. The control was Lakshman Rekha. Firewall, as we call it in nowadays IT parlance. Was the control working? Did the control work? Yes. Was the control effective? It was not effective. Sita got kidnapped. Now, look at it. Compliance. We talk about process compliance. It's not done as per SOP. Someone talked about SOP compliance. You go one day before Sita was kidnapped. What was the SOP? Sita should not step out of the line. What was the compliance? Yes, Sita is there, means she has not stepped out of the line. You go to the board and say everything okay. Next day morning, kidnapped. Okay? Process compliance has this. Now I'm again using the word risk. If you look at only process compliance, now, why did this happen? Root causing? Because while it was stopping Ravan from outside in coming, that is why Sita had to step out. It was not stopping Sita to go. When he can make this line from A to B not happening, why couldn't he have made a line that B to A could not happen? So you would basically say, is the control effectiveness not there? So why don't you make it two-way block instead of a one-way block? Once the moment you say that, what will the process owner or management say? Our guys don't have work. You don't trust our managers. You don't trust our people. But this is real life again, I think. This is what the process owner is going to say. This is what the statement. Doesn't Sita have to go out, pick up roots and berries, cook for us in the night? If you don't make her go out, what will she do at home? There's no Netflix also.
Zomato.
Zomato also can't come in, no? So, what would you suggest? So, while you look at control effectiveness, this control is not efficient. So, should you look at, should this line be made at this doorstep or should it be made at the boundary of the art? So that within that premise she can go. No one can come outside. She can't also go. So you can discharge your duties. So process compliance, process effectiveness, process efficiency. Every internal audit if you do, if you would want to put these three filters to your activities and question, process is compliant, but tomorrow if it becomes non-compliant, do I have a control effectiveness? Is that control which I am suggesting efficient enough or not? Look at these, answer these three questions for every process or a risk that you look at. Collectively, the value add can come out of it. And this is another story I am going to talk about. There is a camel, mother camel and a calf. And this calf is asking the mother camel that, Mom, why do you have such horrible foot? You know, look at it, they're so ugly. Mom says, Beta, we are in desert. There are so many quicksands. Now the logic of quicksand is, people also say, if there's a quicksand, you lie down because when pressure is put on a larger area, you don't sink. So that is how, if you put a heel, then you're likely to fall inside. So he says, you are flat-footed so that you don't fall into the quicksand and sink. It spreads the pressure over a larger period. He says, okay Mom, but why do I have this horrible double eyelashes? So beta, we are in desert. There is this desert storm. In a desert, we are desert animals. If this desert storm comes, these eyelashes protect from the dust going into the lens. He says, Mom, why do I have such horrible hum? In desert, when we have to go days without water, then this stores water for us. He says, Mom, if all this is true, then what the hell am I doing in a zoo? So the point here is that it is not what you have and what you want to give. It is what they want. You need to be very clear on it. End of the day, all we say is bursting down to the same thing, what their perception is, what they want. If the gentleman was talking about something, if it is anyway going to risk our livelihood, it is going to risk our independence, it is going to risk my membership, I might as well not do it. But don't force that you should have this, we will give you this. Please consider it as to what they want. They are our customers, they are our stakeholders, without compromising on our independence or our objectivity. More than independence, it is objectivity. And being very candid about it, without it impacting the risk that we would run as signing off an internal audit report. We should be focusing on what we want. That's it. Thank you so much. We are happy to take any questions.
Just to add,
Sorry.
Just to add one point over here is that if there is no problem with the integrity of the company and integrity of the people that are dealing with, very often there's also a situation where do they really know what they want, okay? And that's where probably we can look at, we have that vision of what they require, what they need, and articulate that and get that agreed. Then very often you'll be able to match the want and the need together and be successful in that. Thank you, and it's please.
Thank you so much.
There are any questions for the speakers?
Happy to take any questions. Yeah.
Then when we report,
Sure, great.
when we report and we make a that this is there is something. What is more expected? Like we have to give the solution also, the cost involved.
No, I don't think we need to get into so many levels. If you have the information, you can always share it with them. If you have seen a particular solution in some other organization, it costs them X, and if it is a similar size in terms of number of users or server space, if it is an automated solution, or there is an agency which works at a particular rate and that you can build in here, that you can suggest. But I don't think as introductors, again, don't get into the 2 second and first line kind of a scenario. What we need to be probably talking about is once you understand the root cause. If the root cause solution is that thing that you are talking about, it's enough. If you have some insights about it, you can share it with them, need not necessarily be in the report. You can generally also, as you are discussing, you can say these are 5 agencies, these are 5 mid software, these are 5 solutions available, you can take it. But I don't think you need to go ahead, actually you should not commit, because you will commit a cost. You will not be aware of the scenarios. And it could be then boomerang on you. Listen, the interlocutor said this is going to cost me 1 lakh, but when I went to the market it said 10 lakhs. They are far away from the reality. In fact, it is not a problem itself. So don't get into the nitty-gritties of the solution. Get into the nitty-gritties of the problem. That would be my suggestion.
Usually what happens during discussion, whether they know or they don't know, as soon as we point out the issue, they feel like, okay, what we are going to say about, how we are going to deal that.
Solution.
So that is a solution. Okay, that is a solution. So see, if you know the root, again I'm saying there is a difference. Okay, today you find that, okay, for instance, we talked about that coal problem. Okay, which basically meant what? That we needed someone who could actually be ensuring that there is an equitable distribution of share of business. Yeah? So that is a solution. That was one case. Okay. Let's hypothetically take a case where you believe that, okay, perhaps one of the most common things today we fear is that we make a payment to a vendor with GST, but that guy has not deposited it, and we lose the credit. Correct? Yeah? You can go ahead and say, okay, identify this report, there is this solution available in the market, and stop payment for them. That could be one risk. Or there is a solution, I think Signet or something, which at the time of bill booking itself, you can go check what is the status of this guy, what is the status of my last TDS or whatever it is, and block the bill booking. There is a solution. So you will basically talk about a scenario where you are not monitoring your 2B, 2C, whatever that reconciliation is, and therefore you are running an exposure of GST paid but not deposited by the customer, and therefore a loss of GST credit. What are we going to say? There needs to be an automated solution. That's about it. If you know an answer, you know that this solution costs X, you can verbally say, that is the only point. You will need to give a solution. I think the question you are, do I have to give the cost and all, I was probably responding to that. You will have to have a solution, whether that solution is this software or that software, but you should probably say you need an automated control here, you need more security here, you probably need a different segregation of duty here, therefore A should not be doing B activity also, sort of that. Solution, you still need to give, tell them at least what they should do. But it is probably the larger of what, how, and which all modalities to be used. You can later on assist them in saying, okay, if you want, I can check this from someone, if someone else has done it or whatever it is, but not get into that exact nitty-gritty, buy this software and put it to use.
Yes, sir. In the context of that root cause, how do you differentiate audit and investigation? Because I have a practical problem in my team. The guy who is good in audit, you always get into investigation mode and every time he exceeds the budget.
Okay, so my first recommendation is don't wear the forensic lens at all. Wear a skepticism lens. Okay, and sorry, I probably would believe Urdu is not a very conversant thing, but Ghalib is a very, you would have heard about Mirza Ghalib. He's a very renowned poet and 19th century, non-conformist. There's nothing to do with his drinking habits or, actually he was not a womanizer at all. He was a one-woman man. He said something which I would want every auditor to follow. He said, "Mat takraiyo bazaar mein jo mile Ghalib se." Don't mess up with Ghalib if you meet him in the market. Hai wali poshida par kafir khulla. Wali means saint. So he is wearing the robes of a saint, but he is a complete disbeliever. There is a dichotomy here. He is wearing the robes of a saint, but he is a complete disbeliever. As an internal auditor, I believe that whenever you look at something, look at it from two lenses. You first look at it in a lens that you are the owner of that business and everyone else is a thief. So what are the sort of controls you would want to put? Second, you think that you are working in that company and you are a thief, how will you make money? But that doesn't mean that you start going and questioning, probably trying to see his email records or, you should always do. If there are set of unorganized market codes, which will typically happens in marketing procurements and admin procurement, there is nothing wrong in actually making a call to vendor B and asking whether he is vendor A, which would have come from the codes. There is nothing wrong in these things. But you should not be over obsessed with those things. It is nothing wrong, but don't wear that forensic lens. So actually I'm probably not able to comprehend exactly. If you can tell me what he does which you believe is forensic and whether he should do it, or what he does is investigation and whether he should do it. See, in an investigation you have a clue. In an investigation normally you will have that this activity or this event has happened. This is not like that. Unless your existing observations are leading to it. It should not be a witch hunting where I say, oh, I am not finding any observation, now let me get into this. So if you probably would evaluate what you believe is investigation in your team, then maybe we will be able to elaborate. Maybe it is really not investigation, it is actually the audit that one would want to do.
No, actually there was one red flag. One of the employee came and told that there is something wrong with the organization. It was in the servicing where there was a cash collection and later on depositing was not the full amount. The guy who was delivering the vehicle, it was in actually automobile industry. The guy was delivering, there was a the service the advisor and the delivery guy, they both are compromised, and what they were collecting it was 100, but what they were depositing it was 80, because they were coming back and they were altering all the invoices and they were reducing the labor, everything.
So the point here is altering all the invoices. So first of all, if the guy has made this comment, you should typically check, because this is a genuine thing. So if he's given you the modus operandi also, you could perhaps look at that trend. There is nothing wrong in that. And then it should, and in my logical way, typically I would believe that if he is changing something, then your actual consumption will be more than the standard consumption basis your invoicing. So are there patterns there? That should be a first case. So but just by looking at actual consumption and standard consumption, because if I have charged for 1 liter of oil whereas my consumption is 2 liters of oil, which means clearly somewhere 1 liter of oil is it within the standard norms of a normal loss or whatever it is, that anyway checks you would have to do. But if this is a queue and he's saying he's altering the invoices, then probably the first question we need to understand is, best way to do is wait, is he doing it in those 3 days also? It merits checking is my view, but it should not be a witch hunt. That I am not finding anything, maybe they are doing this also. My view, it should be done. But without anyone knowing, because if the guy comes to know that we are poking him basis someone thing, it will be, if it is not found to be true, that can go back. In my view, it merits checking, because then we are not discharging our duty as an assurance provider.
Two important audit mantras that come to my mind when you ask this question is that, here's a situation where you had collaborative information or whatever, but assuming that you don't have that information and somebody's giving you a response around that. Two important commandments or mantra which comes to mind with auditing things is that one is professional skepticism. We have to ensure that we are skeptical about, we trust but verify. Okay. So these two things, professional skepticism and trust but verify, I think that's something that we are expected to do.
there any difference between internal audit and external internal audit?
Lots of difference.
Many. So, I've been on both sides. So,
sometimes the external internal auditors do their job and go, the internal internal auditors then have to manage a lot of damage. At the same time, perhaps it is a much more question of survival or bread and butter for the external internal auditor, not as much as an internal, because easy to chuck them out, not easy to chuck an employee. So, on grounds of performance or even flimsy grounds of performance, incorrect grounds of performance, they are always more on tenterhooks. So, I'm just giving you two examples, things where they are better off, places where they are not so better off. Sometimes they rightly feel so because they don't want to be challenged or they don't want to be facing any liability. They will put some 100 caveats and issue a report. We need to respect their independence. But then the business comes and says, why are they saying this? How can they say this? I explained them this, I explained them that, so on and so forth, which the internal auditors will have to then manage. But internal auditors get the benefit of having more frequent interaction with the process owners, so there is probably a little bit more connect if the internal auditor is also a social person. But external internal auditors get some of the other industry benchmarking perspectives, latest trends, etc., which can be better used. The external internal auditors are also helps us in scalability. So suddenly you have 3 more plants coming up. I just can't hire, but the external internal auditor can probably deploy more people for that period of time.
Thank you very much.
Internal audit and stakeholders lens is explained. It is not what you have and want to give, but it is what they want. With so many anecdotes and analogies, both the speakers have explained it so easily, and also interestingly. So thank you so much, sir. Can we have a big round of applause? Thank you. I request our chairman to hand over the momentum.
Great, sir.
see the expectation goes and practice. So thank you so much. Thank you so much.
Thank you so much. Thank you, members, for attending this so actively. We will sign off today. Thank you.
Thank you.